Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So that CPI data release got a little bit of a push to the downside with the recouping of those, I think it was like $9 million short that opened up around there, and now that short is at either break even or underwater. What do I mean by that? Well, the open interest dropped and they took out some of the longs. Meanwhile, a $9 million short opened up and they came back to that short, knocking some of them out. So we're back to break even with some of the longs off of the table. Does that mean we can push up higher? Let's go into the liquidity. What do I mean by that? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. So if we look in the last hour, you had a 900K short that got eliminated at the close, and in the last 24 you had both sides, 23 million on longs and 20 million on shorts squeezed out from the CPI data.
Fatality.
So do we continue in that which direction now? So in the last 4 hours, the shorts, 6 million shorts squeezed out of their position. So let's go into the heat map and take a look. So you have some 208 million up at that 50K, 50,555, let's just say, to be taken. We previously came down into a lot of the 100 extras down here. We still have some more down below, but the immediate target at 50,555. We were talking about that yesterday. Do we come up higher and then take it out what do I mean by yesterday? Well, if we go back to yesterday's stream, we were saying that it would possibly come up and then come down, and what do you know? And we said it would also come down to possibly the 236 and bounce, and then it got that rejection. So let's go into what we're seeing, how you could have taken and capitalized on that short from yesterday. So let's go into a lower time frame here. Okay, so here you had 1, 2, 3 hits to the high. Normally we talk about this all the time. You get 3 drives pattern, you get 3 hits to the high. On the third hit, what can you do? Well, you can draw a fib retrace level from wick to wick, and guess what? It came to that 786 retrace, came down to the 2 level, which coincided with the 706. We always talk about the trapdoor, the access granted or denied to that direction, and it was denied to the downside and access granted to continue to the upside, and they came back up to these fib levels, or clean Fibonacci levels, holding as we look at the math, the second pillar of liquidity. So now where do we stand? Where do we want to go from here? So there's a clear amount up at that 50,555. You can see 348 million up in this region. Do we come up to this and fatigue out some of the shorts some more, and then start to make some retrace down into here? You got 2.44 billion all the way down to 43k. So there is a lot of open interest in longs, still causing fatigue, and they don't want to give the shorts up the ghost just yet. So it's possible that we come up to the region here, the confluence region we were talking about, and then make our reaction off of that. That's just off the math. So let's delete that and delete this and go into the momentum. I don't have much time today. My daughter is homesick and I have to take her to the doctor in about 10 minutes. So I have less T-minus 10 minutes of TA and counting. So that's why I'm going even faster than usual. So if we go into the, wait a minute, did we? All right, so turning on the momentum, link in the description for more. I'm gonna go ahead and throw on the usual. Okay, and link in the description for more, momentummaster.info. Be your own guru. Scroll down to features, toggle everything at your leisure, and the trend cloud, the baselines, the stochastic array, and more dynamic alerts to your phone, so you can stay plugged into the market with or without anyone. So one thing we could have been looking at on Momentum Master with that 3 hits to the, you had a manipulation stop hunt region here on this indicator, and then it created a resistance level within that, so you could have drawn your fibs up here, seen that 786 hit, and boom, fade to the downside. Another thing was the cloud was thinning and we faded off of the cloud. If you weren't feeling that, you could have bearishly retest this zone off the cloud rejection, and boom, to the downside. So where do we go from here? Let's go ahead and start our descent through the time frames. Okay, so the 3-day should be closing. If it didn't close already, we got a day on the 3-day closing. The 3-day having a bunch of stop hunt candles as we crossed up the 3-day cross up here. Does this mean we have a continued run to the upside with this cross up event of the baselines? You can read about all this stuff. Just click on baselines. You can read about how they're the leading moving average formula, the first sign of reversal before it actually reverses most times. Okay, so 3-day time frame, oscillator coming to the upside, money flow beneath the RSI considering pushing higher. Williams also on your side for more upside on the 3-day. So 3-day is bullish. If you come to the daily time frame, baselines the baselines are still open and pointing to 2 o'clock, no signs of abating. However, you are coming beneath them, so if you start closing daily candles beneath this daily baseline, the thin boy I call it, you have the thin boy and the fat boy. Thin boy goes faster than the fat boy, who's slower, hence thin and fat. So if you go below the thin boy, that's the first sign of fatigue on that time frame. If you start closing candles beneath that, what do I mean by that? Well, here you're starting to close some candles beneath it, and then you got some downside, or at least consolidation. So it shows you the first sign of fatigue on that time frame potentially happening. The stochastic also coming down here, you had the money flow above the RSI. Yeah, the money flow above the RSI and possibly in the red, so it is possible the money flows out some more on the daily time frame. Coming to our treasured 22, the broken and syncopated rhythm of the 22. 22 already getting that cross. It's fractal in nature, so you can see what it would look like on other time frames in advance of the lower time frames. So you're getting that baseline cross and the price beneath the baselines. This is what is described here. When price is beneath and begins to cross, downside begins. So are we going to get some acceleration again to the downside to recover some of this wick? Was this a dead cat bounce and you're getting an A, B, C to the downside? That is the question here as we look at the 22, which is starting to show signs of bearishness. 22-hour oscillator also coming lower. And let's take a look at the 12. Shout out to everyone here, by the way. Shout out. What's up, straight away life? You should have thousands of subscribers getting all this flow. Thank you. So the 12-hour time frame. One thing that we had here was if you could tell people about it, that'd be great. One thing that's interesting here is if we do a shallow retrace, the body came above this 382. If you take a Fibonacci and trace in the direction the candle went ultimately, which is to the upside, and the body closes beneath above the 382 in this case, and if it's a downside candle below the 382, that is objectively bullish. That would be a hammer, even though it is purple in terms of downside closing less than the candle before. This buyback wick is quite bullish in nature, so that is one thing to look at. The 12-hour close was quite bullish. However, we're starting to close beneath the baselines on the 12. If this 12-hour candle closes, this is going to bring the baseline cross from the 22 down to the 12, and then you'll see that cascade of the 22-hour of the 12-hour cross down event. The last time we had a cross down here, we at least went sideways for a couple days. So this cross down event on the 12, something to pay attention to. Here we had that cross down event that cascaded, boom, boom, boom. So you got to be careful on the cross downs of the 12. They can cascade in a juicy short opportunity. Coming to the 6-hour time frame. Did we see the oscillator on the 12? Sorry, I'm going a little bit faster than usual. So the oscillator on the 12-hour time frame has the money flow beneath the RSI, suggestive of this coming up, but it looks like the RSI is coming down to meet the money flow. This is the rare occasion after you have a huge run where sometimes the RSI comes down. Generally speaking, when you get the money flow beneath the RSI like that, you get a money flow insertion. What do I mean by that? Well, right here you had the same thing. I'm not sure if you can see it on the stream quality, but there's a gray line with the crystal here beneath the RSI here, and then that RSI, this RSI value, basically that disparity, the money flowed in and came up to the RSI, and then you had that burst up. And so same thing conversely, when you have the money flowing above the RSI, it starts to come down to the RSI. This is why we put the money flow over the RSI. It's not just a bunch of squiggly lines on a chart. It has logic and meaning behind it. So if you look at this 12-hour, this could be crossing on the Williams, and if you get that cascade, you could be seeing the RSI come down to the money flow again. Until this RSI comes down to the money flow, I still feel we could be having the money flow insert back up. So watch for this cross down event, and then that bear, if you are in a short, then you can rest easy once this starts to cross and cascade and potentially suppress. So seeing when this 12-hour candle closes, the beauty of the 12-hour, why do I use the 12-hour? Well, it generally syncs up with Asia and New York. The candle close, daily candle close, and New York. So where does this close as New York opens? That's where that key information will come. And then if you come to the 6-hour, why is the 6-hour good? Because it syncs up with London. So the next 6-hour candle will tell you where London puts it. And so knowing where the banks, Asia, London, and New York want to take the price shows you inside all these candles. So the 6-hour is starting to come down here. You're getting the cross down event of the Williams, possibly suppressing this as the RSI comes down to the money flow. Do you get this cascade? You had previously bearish divergence as we were coming up into the highs here. You had some lower highs on the RSI, higher highs on price, and now we're starting to possibly see the cascade effect. Things to look at, we have this point of control down here at where is this? Let's go ahead and put that line there. We're going to change it to red to make it I think it was this one, yeah. So this is the point of control for the range at 48,111. So do we come back to this point of control? We rejected off a point of control here. Do we come all the way down to the 236 again? 47,865, your bullish narrative continuation point. We talked about that when we came back here the first time for that bang to the upside. Beautiful. So do we come back to that and test this level? 4% away for the super trend on the 6-hour. A healthy retrace could be in order. You have the cross down events and the possibility of the suppressions of the baselines. Coming to the 4. Uh-oh, I'm running out of time. 3 more minutes. So I think we're not going to be able to do the broader market, just Bitcoin, and call it a day. So the 4-hour time frame also coming lower. Possible suppression of price by the Williams here as the stochastic comes down. You got 3.3% away. That is at the 236. So watch out for that. Coming to the hourly. So the hourly also, cloud is starting to thin after that burst up. Do we reject off this cloud? We're getting a cross up event here. Do we continue higher or not? Starting to take off on the hourly time frame and looking lower. 15-minute. Yeah, I know, we're gonna go soon. Sorry. So the one thing to look out for bullishness on this idea of that suppression being negated is here on the 15. Now you're getting a cross down event of the 15-minute. So does the 15-minute come down to this cloud and then bounce or not? So watching for this inflection point at 48,963. It happens to be some level here on a higher time frame wick. So do we get a reaction and bounce off of that? Currently you're seeing the suppression of the price. Asia generally likes to dump it or fake pump into a dump into London. So do we see this kind of sideways until London action? Does it go down to here? Can't really predict further than that right now, but on the higher time frame fatigue, you could get a cascade that goes lower as people try to buy back. If we get a push up to here, you can see if that fades at that point. It's all if-then statements. So you have an inflection point at 48,963, 49K basically, and 50,777. Let's just say 777s. That's my story and I'm sticking to it, folks. So do we see this kind of come a little bit lower? If it does break this area, this 706 area, look for a C-wave acceleration to the downside. If you see this in a manner here, let's do the retrace zone. Change this to a deep retrace. We came to the 706 region of this impulse. So do we come down to these deviation levels? So you have 2 points of interest here, looking at 49K, how does it react? And then if not, coming to 47,157. You have a little range manipulation accumulation zone there to come back to at the 618 deviation. And that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you